The 60-40 portfolio is dead, folks. It is dead. It does not do what it's supposed to do, which is to moderate risk while maintaining growth. Hi, friends. This is Colin Richards, and we're back here talking about freedom of wealth. This is foundational to the other two critical retirement freedoms we've been talking about: freedom of health, freedom of time. And we've started discussing some of the low probability approaches to trying to achieve success, because the principle is this: you need freedom of wealth to achieve the other two, freedom of time and freedom of health. You need money to make those happen for you. And the obstacle is the unpredictability and volatility of your investments, things that we're used to using, like stocks, bonds, real estate, commodities, foreign and domestic stocks, and on it goes. And the solution is to look outside of ourselves to institutions and how they invest. And yes, they might use some of the low probability of success approaches for growth or for safety. The challenge is getting both, right? Cash, safety really high, growth kind of low. Stocks, safety really low, growth kind of high. Bonds, safety pretty low. You say, wait a minute, Colin, scratch the record there. I thought bonds were a safe alternative to stocks in my portfolio. Not really. And we talked about that in our previous session. Growth also historically pretty low. And now we come to the age-old, highly recommended, see it every day across our various offices. We see dozens of these a week. 60-40 stock bond portfolio. Would it surprise you that articles came out after 2022 that mirrored the articles we saw after 2000 to 2009 that basically said the 60-40 portfolio is dead, folks? It is dead. It does not do what it's supposed to do, which is to moderate risk while maintaining growth. What people find is security is low. People in 60-40 portfolios discovered that in 08-09 and again in 2022, losing 20+%, 25% in their bond portfolios as well as stock portfolios. The growth is only moderate, so you're sacrificing growth without security. It's a one-size-fits-all solution. It's very cookie-cutter, very canned. It requires almost no effort from your advisor, both in the planning and in the continuing maintenance stages. It is used by the majority of advisors and brokers. We're talking about the 60-40 stock bond portfolio, and it has failed us over and over again when we needed it the most. So what are the high probability of success strategies? Well, Morgan Housel nailed this. He is quoted and repeated by billionaires, institutions, the great minds of economics and finance. His book, The Psychology of Money, is a worthy read. It's written easily. You can understand it even if you're not a financial professional. And here it is in a nutshell. You need to barbell your portfolio. You need to discover how to use principal-protected alternative investments to achieve the safety that you hope to get from bonds but aren't getting. But also on the other side of your barbell, you need to have growth. And if we can take your investments and have two different approaches, not one big blended blah, with returns kind of blah and safety non-existent. But if we can get a safe, strong portion of your portfolio the way billionaires, institutions, endowments, and so forth pursue, then we can be much more aggressive on the other side of your portfolio. And what do we do this with? Well, we're going to use principal-protected, market-linked strategies, alternative investments that are able to protect and grow your portfolio on one side in exchange for less liquidity. You say, oh, Colin, but I need this for income. You're right. And so what we're also going to do is develop within that an abundant income guaranteed solution for you so that you never run out of money before you run out of life. You say, I didn't know that was possible. It is. And it's worthy of a conversation as we sit down for your retirement freedom review to discover, do you have true freedom of wealth? We'll test it. We'll show you where you sit with your investments and your success probability of never running out of money before you run out of life. We need this, right? For the freedom of time, we need an abundant but guaranteed income. And then on the other side, we may have risk, right? Because we're going to grow, but we're not dependent on those funds. We can actually teach you how to get the same income that normally requires your whole portfolio from just half of your portfolio. And on this other side where there's risk, we can afford to let that ride a little bit up and down, placing the emphasis greater upon stocks and achieving greater growth overall in the portfolio. So you don't have this blah middle return. Our safe side is growing. It is secure. It is less liquid, but it can provide an abundant stream of income for you. Our other side of our barbell, it has much higher levels of growth potential. It has lower levels of security, but it's not a problem for you because you can ride those waves on that side because you're not living on it. You say, well, what if it just really drops beyond my comfort level? Well, here's the cool part. When we sit down with you, we're going to work to discover your safety percentage. Now, that is a specific term that we use here to define how low you're willing to see a portfolio go down. I'm talking about your overall barbell, both sides, safety and growth. And what we're going to do is we're going to write that down. And we're going to develop a plan so that if that ever falls below your tolerance, a specific numeric and percentage tolerance, we call the safety percentage, you don't have to pay. You don't have to pay. And you can learn more about that by talking to us, by checking us out on the web at lordandrichards.com. But contrast that, right? You got people out there like Fisher and so forth that say, we do better when you do better. Well, of course they do. They're charging a fee on your assets. When they go up, they go up. But they also have figured out they can ride out the downs a lot easier than you can. A 20% hit to their income is different from a 20% hit to your portfolio. That is absolutely vital for the success of your retirement. So what happens when you do worse? They're actually still doing better. And our clients shout this out. And so we're going to sit down together and develop that plan for you and develop a safety percentage so you don't have to fear. You'll have part of your portfolio completely risk-free, developed to engineer an income you can never run out of with strong growth opportunity. And on the other side, even stronger growth opportunity. And to mitigate your risk and your downside, we're going to get in there and actively deal with risk. We're going to risk manage it. So you're going to need a risk reduction specialist, not just an income distribution specialist, which we've talked about already, far different from what most people have, not just a specialist in hybrid products that take advantage of other people's money, but you need that, but also a risk reduction specialist. So you can have true freedom of wealth, carefree, not having to lie awake at night, wondering what's going on in the markets, wondering what's going on across the sea. I want you to have that feeling of sitting on a beach with your spouse or enjoying seasons of life with your family and not even being worried about it, not even concerned about what the markets are doing because you have freedom of wealth, freedom of time, freedom of health. We can get you there. It simply starts with a wonderful conversation, and that begins with a phone call.